rocking. Welcome to Crypto and Assets, guys, on this amazing Saturday. I'm very excited because every single week we decide to bring something maybe a little bit different, maybe just like an emphasis on something. But today is actually going to be a very good call because we named this call from the get-go Crypto and Assets for a reason. Myself and Jean-Luc had an idea, had a vision to obviously bring you guys some information on the weekends because we realize that most people take off the weekends, right? And if you're plugged in with our amazing platform and what we have here within Powerhouse and Zenrai, we have amazing sessions throughout the week, but on the weekends, there's not really much when it comes to live. There's a lot to study, but nothing like live and in action. And I know that people have jobs and have a little bit more time sometimes on the weekend. So we decided to run these to help people plug in when they not have a crazy schedule that they have maybe throughout the week, but also to bring a two sides of the spectrum, right? To bring crypto, but also to bring assets, right? Assets can be a lot of different things. And today on the asset side, we're actually going to be going through the stock market. Now, for a lot of you guys, this might be a lot of new things. Even for me, I would say I'm more of a newer when it comes to the stock market. I mean, I've been studying it through, a great educator on the platform for years, but now I'm kind of diving more and more into it to really understanding a lot of different things. And, somebody like Jean-Luc as well, as you guys know, I'm going to have him come up here and start things going. But he's somebody that is very involved with the traditional side right now when it comes to finance. He actually, has the job in New York, believe it or not. But he has a good amount of experience to being around that type of environment, and it's amazing to have both sides, traditional and then the decentralized side, right? Because once you understand how one works, you can understand how to maximize the other because they both are literally doing the same thing, just in the different horizons when it comes to centralized and decentralized. But finance is finance, right? And I like this because I went to school for finance and I wish I would have learned the stuff that we're going to talk about today when it comes to traditional markets, but I didn't learn any of it. So the information today, honestly, is going to be higher level than what most finance majors really decide to understand because it's deeper than just the terminology and the definitions. It's more of really finding the right assets to invest in, why to invest in, maybe because on what areas, and what are the back end with it, right? So put a 5 in the chat if you actually think that's exciting and you're looking forward to that type of information that might be a little bit different, but it will bring a lot of horizons for a lot of us that maybe we've heard a lot of crypto, but we haven't really heard of stocks. So with saying that, I do want to bring on my brother. As you guys know, I don't do this alone with my boy, Jean-Luc. Already talked a lot about him. He's going to be talking about what's going on in the markets right now, what's going on in crypto, what's going on as a whole, and then starting the basis when it comes to stocks more in depth as well. And then I'm also going to come on here and kind of do more of a chart work and actually financial side of it, and stuff like that on how to find the right assets, how to find the right ones from the information that we have and how to maximize that. So put some sevens in the chat for my brother, Jean-Luc. I'm going to go ahead and pin him. And we can go from there.
Amazing, amazing. Super excited to be on this call, hosting the call with Gil. Crypto and assets every Saturday. This is huge. You really look forward to it. And as Gil mentioned, really giving game from the decentralized space to the centralized space, which is what a lot of people actually overlook. So yeah, wasn't actually masses of news in the crypto market this week. But there was a couple of things that definitely caught my attention that I wanted to mention on this call, and it actually was perfect because it's literally crypto and assets. And so there were a couple of massive IPOs this week, initial public offerings, companies that went from private to public so that, everyday investors like me and you could choose to invest in it and look into that. And so some of you may know the company Klarna. It's that sort of Swedish based buy now, pay later sort of company. They IPO'd. And what was huge is that it was a $15 billion valuation, I believe, which is absolutely massive for a company. And then there was something else as well. There was another sort of crypto-based company called Figure Markets. And Figure Markets, they also IPO'd this week. And that was at $5.3 billion. And so, there was also a third IPO in the sort of fintech space. And for those of you who may not know, fintech is a massive industry. It's basically finance and technology combined in together as one. And in the past few years, it's kind of been a, maybe since COVID, like a craze in a sense, or maybe like a growing industry, combining the two together because really with technology advancing, with AI advancing, and other forms, things like data, combining that with finance has been one of the most lucrative things that entrepreneurs and venture capitalists, people who invest in these early startup companies, are looking to do. And any company that is trying to get a valuation, it's 10x. It's a 10x valuation. It's a 10x multiple on their valuation for anything that's tech related, which is huge. And so that basically allows those fintech type of companies to have these like astronomical valuation numbers. And obviously, as a company grows and as that hype is there of like, oh my gosh, like this company went IPO and then it went from 500 million to 5 billion. That's when a lot more investors come into play. So I think that's one thing that's key to know. And so Figure Markets is actually quite interesting. It's basically a platform where you can get crypto-backed loans. We spoke about that previously. And there's also an exchange where you can trade. And so it's basically combining the institutional side with the crypto decentralized side. And interestingly enough, one of the advisors for this company I was in communication with actually last week, and they were just IPOing. So he was just telling me about that process and how it is and how busy things are. So yeah, I just find it quite interesting, but definitely something to look into in terms of like services and what they do. And so besides that, there wasn't too much news. So I wanted to really dive into a couple of interesting things here regarding stocks. And so I do want to get in the nitty and gritty. So you might need a pen and pad because there's a lot of notes here. There's a lot of notes. But I want to break down how you're going to look at a company through Yahoo Finance. So Yahoo Finance is basically, I'm not going to say non-biased, but it's the main source for looking at the numbers behind different companies. And so, if we search TSLA, which is obviously the ticker symbol for Tesla, you'll find that the public listed company is here, and you can see all their financials and everything here, and you can see sort of the graph and things as well. But what you don't want to do is, I don't recommend looking at technicals on Yahoo Finance. Like stick with TradingView, but it does just give you like a brief overview of things. And so I think it was 2 weeks ago when we dove into how to come up with a criteria to analyze stocks from a numbers perspective. And let's just have a quick recap on that. And if we go over here to financials, we can see, because I think that's really important. And so there were really 5 key points when it comes to breaking down the financials of a stock. I want to see if you guys remember any of those. And so one of them, just grabbing my notes here actually, dive into it. One of those notes really was understanding cash flow and looking at the previous few years and to see if that cash flow has grown. And so on the financials here, you can see those forms of numbers. So let's go over here to cash flow. Amazing. And so looking at 2021, because that's what we would do, we'd look at the furthest year on the right side, and all we're doing is basically comparing it to TTM, which is the current cash flow that we have. And so it was 3.4, and then now the cash flow is 5.5. And so that's just one metric that we went through 2 weeks ago to kind of determine how we're going to look at a company in terms of, is it growing? And then obviously you can come to the income statement and you can look at things of revenue, right? From 2021 to now, is it growing? Yes, that's a tick. And so you want to go through those 5 points we spoke about to really understand if a company is worth investing in it or not. Now, that was kind of like the basic side. However, I do want to go a little bit more on the intermediate side. So let's go over to the summary, and we're going to break a few more things down. So let me bring this up here. Okay, cool. Amazing. Cool. So it can seem quite confusing with all these different metrics that you can look at, but I'm going to show you guys really what each of these things mean. And you can do this at any company, and that's going to give you the knowledge to be able to decipher a little bit deeper as to whether or not it's worth something investing in. And so we're looking at Tesla right now. Now, the open, obviously, as you guys know, is that's the open price of the market that it came out as. The close, we're traded, so that's the close. The bid, what this means is that that is the lowest price an individual is looking to sell that asset. And then the ask is obviously the highest price that they really want to try and sell that asset for. So the bid is really focused on the buyers, right? Like what is the price that the buyers want to come in at? And the ask is basically what is the highest price that the sellers want to come in at for that share. So if Tesla is $395, well, this is showing you that difference. And so the bid ask spread is basically the difference from the lowest price, the highest price, sorry, the buyer is willing to pay, and obviously the lowest price a seller is willing to sell at. Now, the day's range is just showing you the price range within that day for Tesla. The 52-week range, $212 and $488. That's the range that the market was trading in for the past 52 weeks, which is obviously 1 year. Now, the volume, this is key because if the volume is low, that means that that stock is illiquid. And if a stock is illiquid, just like in crypto, that means that if you own it and you want to sell it, who are you going to sell it to? Because no one's willing to buy it. So you want to make sure that these assets, whether it's stocks or crypto, they have good volume, a high level of volume, because otherwise you may be stuck in a position where you're holding on to these shares. No one wants to buy it. Therefore, you can't sell it. And so you're holding on to this asset with nothing that you can do. So the volume here is of a high level. So that's obviously positive. And now the average volume is just showing you in general what an average daily volume looks like. So that volume, just so you know, is per day. Now, market cap, we understand that's basically the size of the project without going too into it. And so beta, I wouldn't worry too much on that. Now, PE ratio, this is something really important, actually. This is really key. And so, you might want to take some notes on this one. And this is a very important metric when it comes to stocks. And so the PE ratio, what it is it's basically showing you how much you're paying for a stock per dollar of earnings generated. And so I want to break down some numbers here. So I'm going to go ahead and get the whiteboard and I'm going to show you guys a little bit here. So let me change screen. Okay, there we go. Cool. So I'm gonna dive into the whiteboard in 1 minute, but let's just go over what a PE ratio actually is. So basically it's the price to earnings ratio. So it's comparing the stock's price to the company's earnings or profit. And so basically having a high PE ratio, I'm going to dive into the metric of this in a minute. These are typically with growth stocks. Now, what are growth stocks? Growth stocks are stocks in industries that are growing. So I've got it listed here. Things like AI, things like data, things like healthcare, e-commerce, cybersecurity, agritech. The things that people are typically speaking about right now that gets everyone buzzed. Now, these growth stocks are typically higher risk, potentially higher reward. And so that's why growth stocks typically have a high PE ratio. And as you can see here, basically investors are expecting a positive future performance. And so they're willing to pay more for them. So you'll see more volatility with these forms of growth stocks and stocks that have often a high PE ratio. And so I've just got this general metric here just to keep it simple. Like any PE ratio that's above 30 is typically bad. And then any PE ratio that's below 20 is typically good. But it does depend on the industry that you're in. So let me just dive into that for a minute and get the whiteboard up. Let's see how we do this. Stop sharing. I haven't got a whiteboard up in a moment, so just give me a mo. Whiteboard classic. All right, perfect. Cool. Put a 10 if you guys can see the whiteboard. Just want to make sure you guys can see it there, yeah? Amazing. Cool. So let's dive into this a little bit, okay? Now, stick with me here because it's an important metric that I want to make sure everyone has some clarity on. PE ratio. Cool. Now, the definition for this is how much you're paying for a stock per dollar of earnings generated. There we go. Cool. And so I'm going to give two different examples, okay? So this is going to be company ABC. And we're going to say that company ABC has a price of $50. Now, company XYZ has a price of $10. Now, company ABC has earnings per share, which is basically what you can earn for having each share. So if you have one individual share, this is what that will be worth. And we're going to say it's $20. There we go. And then for company XYZ, earnings per share, we're going to say is $1. Now, what this means here is that with company ABC, per share that you have, let's say you have one share, it's basically $20 per share. So each earnings that come out, it's $20 that you have. Now with company XYZ, it's $1 earnings per share. So it's less. So per share you have, you're getting $1 of earnings back from this company. And so the maths here that I want to break down is that company ABC trades at a multiple of 2.5x because 50 divided by 20 is 2.5. And company XYZ trades at a multiple of 10x. Now, based on this, what it means is that per share, you're actually earning more with company ABC because it's $20 per share. Whereas with company XYZ, it's $1 per share. So for what you have with company ABC, this is good. That's the company that you'd probably look to invest in. However, it does depend on the industry you're in. Because let's just say that company ABC is a utility company like Verizon, which has limited growth, right? Because let's say Verizon, well, it's actually more like a value stock. It's more of a slower growth. It's a mature stock. So there's not much growth. But let's say this company over here, company XYZ, is a company that's, let's say, fintech company with growth of 100% a year. Now, because we understand the type of industries and the companies that we're dealing with, initially, it looked like company ABC was the company that was good for us to get a higher amount of earnings per share. However, because it has limited growth and it's something which is more of a value stock, now we understand that company XYZ is actually going to be better because we're going to get more for our money. Because we understand that it's a fintech company with growth of 100% per year. Therefore, this 10x multiple, this actually looks more lucrative now. Now, with understanding what industry these companies are in, I'm going, well, company XYZ is cheap. That's actually really affordable. Because even though it's $1 earnings per share, the growth that the company has, I can see a future of that. So this is basically breaking down how much you're paying for a stock per earnings generated. And so I want you to know that when you're looking at these numbers, the type of company and the industry that they're in, that's really important because that's going to give context as to, well, is that a high PE ratio or is that a low PE ratio? And as you guys saw, maybe you want to take a screenshot, but as you guys saw on my Word document, a PE ratio with something that's above 30, there we go, is deemed as bad. And a PE ratio that's something below 20 is deemed as good. But it depends on the company that you're in. Okay. So when you're looking at PE ratio on Yahoo, take that into consideration. Is it a growth stock or is it a value stock? Now, as we can see here, low PE ratio, these are value stocks. These are stocks that are often typically undervalued. Now, they're lower risk. So that means typically lower risk, lower reward. But they are mature companies. They are companies that have been here for decades. They are not companies that have been founded 5 years ago and they're just IPOing today. And so that's another thing that you want to keep in mind is the more recent that the company's IPO'd and become public, the less financials that are out about it, which typically means the more risky it is because you haven't got a track record to look at. You haven't got something to go back in 2020 and see what was their revenue like compared to today. So low PE ratio, typically value stocks, high PE ratio, typically growth stocks, high PE ratio, typically more risky, low PE ratio, typically more of a safe bet. So put a 10 in the chat if that's something you guys can understand a little bit, just keeping it simple. I understand if the numbers seemed a bit confusing, but just as a general basis, I want you to understand high and low ratio and what really like constitutes of it. And as you can see here, low PE ratio, it's the less an investor is paying per dollar of a company's overall earnings. As you know, company has earnings reports, they file every quarter. When those earnings report come out, there's a lot of anticipation. And if it's above what's expected, price typically appreciates after that earnings report date. And if it's below what was expected in terms of profit, then typically the price falls. And so there's a lot of traders and even investors that anticipate what is the earnings report going to look like for Q4 or Q3. And that's how they're going to base their trading or base their investment off of. And these are some examples of value stocks, guys. Mature companies that have been here for decades that have a long track record. Things like Walt Disney, things like Verizon, things like ExxonMobil, Pepsi, Honda, GSK, which is a healthcare company. So the types of industries in these value stocks, you're looking at things like automobile. You're looking at some healthcare that has been here for a long time. You're looking at certain manufacturing companies. You're looking at certain entertainment industry companies. What you're not looking at is the growth stocks, which might be the things like the medical cannabis. It might be things like electric vehicles. It might be things like data AI centers. That's more growth. That's more risky investments. So that's something to keep in mind. Now, as you can see here, I'm diving into earnings per ratio and things like that. But let me go over back to the Yahoo Finance, and we're going to finish off a couple of these numbers. So hopping over here back to Tesla, we covered PE ratio, earnings per share. I mentioned that earlier on. And so you can basically get that number, by the way, the earnings per share. You just divide the price of the stock, where it's at now, with the PE ratio. So if you divide 395 with 238, you get 1.66. So that's how you get an earnings per share. And the earnings date, this is key, October the 22nd, 2025. Now, because Tesla doesn't have these two, I'm actually going to go to Verizon because I wanted to dive into what that means. So let's go to Verizon, which is mentioned like a value stock. It's been there for a long time. And so this is important. Ex-dividend date, October the 10th. All that means is that if you want to get the earnings, if you want to get the dividends payout, you have to invest in this project by October the 10th, 2025, in order to be eligible for that next dividend payout. That's important because dividends in stocks, for those of you who don't know, is basically what the company is going to give you back in shares just for holding the asset. And so as you can see here, it's a 6.28% dividend. That's the yield. So you would get, if you invested $1,000 at the end of the year, you will get $62 on your investment just for holding the asset. It's basically analogous to staking in crypto, where they give you back tokens just for holding the project, whether it appreciates or depreciates. And so a big thing for investors, Warren Buffett speaks about this as well. It's basically going for stocks that has a good level or a high level of dividend yield, because the goal is for that to either beat inflation or to get near to it. That way your money isn't negatively affected with the fact that inflation's at 3% or whatever it is, because 6% is going to be the 3%. Now you've just made 3% on top of your money for holding it. And so some of you may know this, but multimillionaires, what do? Their goal is to have a 7-8 figure stock portfolio with dividend paying out, 6 to 8%. Why? Because 6 to 8% on $1 million is 60 to 80K. And 60 to 80K in dividends every year is the annual salary of just above the average American. So just thinking logically here, if you have a 7-figure stock portfolio just off the dividends, now you're living. Now you don't need to put in the time for money with certain jobs, because the dividends is paying for your lifestyle. Put a 5 in the chat if that makes sense. That's really how the wealthy think. Amazing. Cool. Now, this 1-year target estimate, guys, you got to be wary of this, right? Because this is Yahoo. So, you don't know what goes on in the back end, but don't rely on that 1-year target estimate. The price right now is $43. Yahoo's saying, hey, in a year's time, we expect it to be 48. Like, obviously, they're going to have some form of bias or whatever it is. So that's why you take that with a grain of salt. And we're traders, so we know the charts, most of us. So you can do your own large time frame analysis of market structure to see where you might be expecting a certain stock to get to. So that's some of the numbers there that I wanted to dive into. Now, some of you may want to take a screenshot of this if you'd like. So basically, I'm just going over like some definitions here. I didn't go through all of it, but let me think the best way to do this. Yeah, so like if you guys want to like take a photo or, whatever you like, maybe that's useful. But I'm just going to like scroll down a little bit, maybe page to page. So like these are the stock terms, volume, average volume. We dove into that. Market cap, PE ratio. This is page 2. You guys can take a little screenshot. And then this is the rest, the bid price, the ask price, beta. It's basically how volatile the stock is. I didn't get into that too much. But basically the lower the number is, the less volatile, the higher the number, the more volatile. That's also key. And then you can see here equity, dividends, dividend yield, ex-dividend day, and DRIP, which is about reinvestment. Don't worry about that too much. But yeah, so that's what I wanted to dive into today. There's a couple of other stuff, but I don't want to take up the whole call. You know what I mean? I've got my guy Gil who's going to give some big game. So yeah, hope you guys learned 1 or 2 things. Just wanted to go over the numbers and the financials there. And it's basically like kind of look at it as part 2 of what we did the other week regarding the criteria to really break down a stock. And yeah, Gil, my brother, I'm gonna pass it over to you.
For sure, guys. Put some 9s in the chat for my brother Jean-Luc coming on here and going through a lot of game. I know, like I said, I know a lot of this is probably new for you guys. Even for me, there's some things I learned for sure that I haven't gone crazy in. But it's good to get that awareness of it, because you can only expand your mind by learning new things, right? Like, I hope you guys agree with that. But that's very important. I think there's, this is just a start of, what we're going to be kind of going into a little bit more, because at the end of the day, you want to be a little bit more financial literate, obviously, when it comes to traditional markets as well. Because remember, all of this is translating into crypto right now, believe it or not. And, a lot of people in the traditional world, it's harder to grasp because it's going from traditional to untraditional. But if you understand already untraditional and understand the opportunity of that, but you bring the traditional philosophy here, then you are able to have more of an advantage in that marketplace. Put a 1 in the chat if that makes sense, right? Because that's really the advantage. If you have like both, like that's like game over type of deal, right? But what I want to kind of go into is I'm going to emphasize a little bit what Jean-Luc was talking about. But I'm also going to go on some charts when it comes to stocks, and I'm going to end the call with some crypto, and you guys can ask any questions as well. So the first thing I'm going to go through, Jean-Luc did a great example on how to go through Yahoo Finance. This is like the CoinGecko of stocks. right? People who are using stocks who say CoinGecko is like the Yahoo Finance of stocks. But basically, this is kind of where you look at all of that. Now, what I'm going to show you guys as well is how to have, these are the 5 questions. On top of everything that John went through, I want you guys to use these 5 things to really research and understand what kind of rated stock something can be on top of what John was talking about, right? I don't know if you guys know, but put a 5 in the chat. You've heard of Patrick Kenny on Zenrai, right? On our platform here within Powerhouse, we have an educator called Patrick Kenny. And he has 5 questions he's asked himself to categorize a stock that's either A, B, or C, or even D. Okay. And I'm going to give you guys those 4, including the ones that Jean-Luc was talking about as well. The first things is finding the stock, right? So I want to use a couple of examples, right? Snap is one of the examples. This is Snapshot. Put a 1 in the chat if you've heard of Snapchat, obviously, right? Back in the day, back in the OG days, even before they went public, that's when most people were using it. But this is obviously a stock right now. And when you look at this, you're like, Gil, this is down. Like, this is dead. Like, put a 1 in the chat if you agree. Like, this is dead, right? Like, it looks dead, right? Like, it looks like this is 91%. It's funny because they say that only happens in crypto, but that's not true. That happens in every market, not gonna lie. But I'm gonna show you guys this as well, because a lot of people believe that the opportunity is here, right? We know this. They want to sell, they want to buy at the top, sell at the bottom. But really, opportunities lie at the bottom. But not for every stock, not for every crypto. So when you look at the numbers here, usually we look at tokenomics when it comes to crypto, but in the stock market, we start to look at the numbers in the finances back end, which is a little bit easier than, for example, the crypto market. And like Jean-Luc was talking about, here under financials, you can see that. But I'm going to give you guys the 5 questions that I've been able to use the last couple of years to see a couple of these. I'm going to talk about some of them that I personally called out to myself, but I didn't buy, unfortunately, because I wasn't in the stock market. But I was like, okay, I'm going to get in. And I missed out, but it's not happening again, to be honest. Like this time around, I'm getting in, as we're going throughout the rest of the year. But the first question is this, and Jean-Luc talked about it, but now it's just going to be categorized. Is the revenue growing overall, right? Jean-Luc talked about it. So let me know in the chat box. This is total revenue right here. Let me know for this this stock right here, is this growing overall? Meaning looking at all the years, even until now, is it growing all the way? Yes. Okay. So that means check, number 1. Number 2, is revenue growing recently? This is recently right here. Put a 2 in the chat or put yes or no if we're growing recently. These are the numbers, right? Right here, these 2 numbers. Yes or no? Are we growing recently? Right here. Okay, boom. Second question, yes. The next one is cash flow, right? Is cash flow a positive number? Yes. Current cash flow is positive, right? Number 3, check. Okay, so far it's an A-rated stock. Number 4, is cash flow growing overall? Now we can see that in 2021, it was up, then it went down, then it went down, then it's going up, then it's going up. So no, it's not growing overall, right? Overall. But one thing that it is doing, which is number 5, is cash flow growing recently? So yes, the answer is yes, recently. So we have 4 yeses, 1 no, right? So that really puts Snapchat, basically, technically, according to Patrick Kenny, we're more of like a B-rated stock. I would really call this like an A-, in my opinion, from what I see. But let's say B-rated stock. Now, what makes this a play on top of the technicals, from what I've learned, obviously, and we know this, is also the charts. Because there's going to be some A-rated stocks we might talk about real quick that are at good price action. But Snapchat right now is at good opportunity. So this is honestly a great example. Yes, I'm going to do this actually. Hold on. I'm going to do this for you, because I know I went through it quick. This is what I'm going to do. I'm going to put it right here. These are the questions I ask myself. So go ahead and screenshot this, whatever you want to do. But these are the 5 questions. Is revenue growing overall? Is revenue growing recently? Is cash flow a positive number? Is cash flow growing overall? And is cash flow growing recently? Right. So these are the 5 metrics. If you have all 5, that's an A-rated stock. If you have all but one, you're more like a B-rated stock. If you have all except for like 2, you're a C. And if anything less than that, then you're a D-rated stock. And then if you don't have any of them, then you're kind of like, don't even look at it type of vibe, right? As well, right? So hopefully you guys got a screenshot of this. Now, the next one I want to go through actually. So this is a good example of a good opportunity. And I think this is a great opportunity because of also where it's at the chart. So right now we're really at $7.49, right? I'm not saying this has a potential of going back here, but I'm just saying opportunity does lie in this right here. Obviously, there's things we'll talk about. If you know, you know. Shout out to Jordan Morgan, but there's a lot of volume right now, right? As you can see, look how small this wick is. And this is just advanced stuff, but I'm just giving you guys this now. We'll Matt go this through another call because I'm learning this right now, actually. And you see this volume right here. Put a 5 in the chat if you see that. You see how small these wicks are, but you see huge volume. Like it's the same volume that we had, like it's actually more volume than all of this. It's more volume than even this move. It's almost the same amount of volume as this move, right? It's even more volume than all of this that was up here. So that's a very bullish, honestly, very bullish confirmation. So Snapchat is a very good example of a good one. Now, another one that I've been looking at for a minute, and I'll give one that actually I looked at and I didn't get in, and it's like the biggest play, not gonna lie. But the next one is Disney. John Luke kind of mentioned Disney. Disney, we're going to do it together so you guys can have an idea. And I've been looking at this. Actually, I was looking at this here, like around 2023. It's still around the same area, so we're not really missing out too much. And I see potential rejection. I'll talk about that. But we're going to go ahead and look at Disney because Disney is actually a good shout. I don't know if you guys remember what happened. Let me know if somebody knows what happened. I think it was 2024, right? There's something that happened, right, when it comes to Disney, right? The CEO got fired and they hired a new one. So there's a lot of things that happen in the back end, of course, but that doesn't make things a good stock or a bad stock, right? I always tell people men lie, women lie, but numbers don't lie. At the end of the day, like the numbers is what you really want to look at. Because look at Snapchat, right? Looking at the chart, it doesn't look like a good investment, but then you look at the numbers and it looks like a really good investment as well. So we're going to go ahead and look this at Disney. So the first things first, let me know in the chat box, what is the first question we ask ourselves from what I just went through? What is the first question we ask ourselves? Let me know. Let me know in the chat box. It's pretty easy. So that's why I'm like, yeah, I say it once, you probably got it. It's not too crazy. But let me know in the chat box, what is the first thing we look for? Is the revenue growing overall? Okay, amazing. Now, let me know in the chat box, are we growing overall? Yes or no? Yes or no? Yes. Okay, bet. What is the second question we ask ourselves for stock research? What is the second question? So the first one is revenue growing overall. Let me give it away. What is the second one? Okay, is it recently growing? Yes or no in the chat box? Yes or no in the chat box. Is it growing recently? Yes, amazing. So far we're good. Number 3 is cash flow. So we're going to go to cash flow right here. Is cash flow a positive number? Yes or no? Is cash flow a positive number? That's the next question. Yes. Okay, cool. And then what's the next question? There's number 4. What's number 4? We're in cash flow now. Let me know in the chat box. I already gave you guys number 3. Is cash flow a positive number? What is number 4? What is number 4? Let me know what number 4 is. Is cash flow growing overall? Okay. Now ask yourself, yes or no? Is cash flow growing overall? So looking at this whole thing, has it been growing every year? Yes or no? Okay. Let's see. I want more participating to kind of see some bias, right? Because this is kind of a tricky one. This is a tricky one, actually. But is cash flow growing overall? Okay. Well, the answer is actually no. Because in 2021, we went from 1.9 to 1. Right? So it missed a year, right? So overall is the whole thing. Okay. Doesn't make it a bad one, right? It just kind of gives it more of a, B rated stock. I like to say A minus to be honest. But you can say B, A minus. And then number five is cash flow growing recently. And this one is yes. So this one's rated the same where Snapchat is. Okay. It's at the same rating, which is good, which is actually a really good opportunity. Now, the next thing for this one, because Snapchat is really like now, really, to be honest, but Disney has an opportunity, in my opinion, because it has a potential retracement. Now, if you guys know how to look at the charts, we use the same thing for every market. That's what I love about learning trading first, because what you learn in trading, you can apply to crypto investing, you can apply to stock investing. It doesn't really matter. Like it's funny because me and shout out to Junior actually, we scalped, we sniped the flights for Bahamas. He sent a signal in the chat to me and he's like, bro, it went down. Like literally, that's what happened. There's a chart for prices of the plane, and it really went from here to here in one day. And we knew that was the bottom, and that was the bottom. So we sniped it. Right. The same thing as you learn in this, guys. I'm telling you guys, when it comes to anything with a price, it has a chart to it. Like literally, I look at that when I look at plane tickets and different things. So right now with Disney, one thing I like to see is that we have a break of structure. Right. Put a one in the chat if you can see that. Right. We were more consolidation. We had a break of structure. And what I like to look for, like a lot of us do, is we like to look for retracements, right? When it comes to any higher investments, I like anything under 50%, to be honest, because it's like a higher investment, right? You don't have to look for the scalp, the perfect entry, right? It's more of a time thing. So I really like Disney anywhere below 104. Okay. So anything really below 104, ideally under 100, even better, is really, in my opinion, a good entry when it comes to Disney. And this is going to be a good one because, as you guys know, Disney is Disney at the end of the day. And also, there's a lot of things coming up with Disney, like movies and a lot of different things that they're starting to do. I think 2026 is going to be a very bullish year when it comes to, just entertainment as a whole. So this could be very bullish going into 2026, even 2027 as well. Okay. Now I'm going to talk about one more with a good potential. And then I'm going to talk about one that I kind of missed, which is this one right here. And it kind of makes sense how you look at it. But another one that I think a lot of people aren't talking about, because one of them that people are talking about right now is WBD. So I'm talking about two real quick. WBD. Now, if you guys don't know WBD, it's Warner Brothers. Like, put a one in the chat if you've seen a movie and they have the Warner Brothers, like, the intro and like the logo. We've all heard of it, right? It's huge when it comes to entertainment, movies, stuff like that. And actually, there's been a big bump up. Okay. And if we go look at, WBD, and it's actually, they have some news that kind of came out that actually made it bullish, which is pretty cool. And even that asset as a whole is pretty bullish as well. But we can see that Warner Brothers, I'm just going to go through it. Growing overall, no, right? Because it went from here to 33 to 41. Actually, no, yeah, yes. What the heck am I saying? Overall, yes, it's grown overall. This is the time now. So yes, year by year is still growing. This is like now. So that's like a plus, but yes, it's growing overall. And then we go to cash flow. Okay, we can see that this is actually a no, right? Not overall, but it's not growing recently either. Well, yes, from 2023 to 2024. And then we have the recently here, it's not. So this is more of like a C graded stock right now, right? So this is more like a C right here, right? Because we have a couple of no's. But I think if retracements, it still has good opportunity, because what also helps this stock, which will make it like a C plus, exactly, Joseph, you already know. What makes it a C plus, in my opinion, is the opportunity, because we're super low, right? We're literally like from the top, we're at 90% of a decline. So it makes it, in my opinion, like a C plus with that. But we want to look for a retracement. Okay. Right now, you don't want to buy here. Okay. I would like to see this market at least go here. Anything under $14, $13, anything here is what I would like to see for a potential buy. And yes, like Joseph said, Paramount is looking to purchase them, which is bullish. Even Paramount stock has gone crazy up as well because of this news. Paramount is something that is streaming services, right? So yeah, this is kind of very bullish as well when it comes to it. Now, I did want to give you guys a sleeper that a lot of people I know aren't talking about. to end this, and then I'll go really quick when it comes to crypto, but I know we're more focused on stocks today, is Roku. I think Jean-Luc remembers me talking about Roku. I think this was like 2024 when I was like, bro, like Roku, man. And it's still been here. And I looked at it today and I'm like, okay, well, what is its rating today? Okay. So I was looking at Roku and I was like, okay, well, I don't know about if it's still on the TVs, right? Like, but we know Roku, right? They're on almost on every TV, like any like smart TV, most of them, mostly the economical ones. But as we can see is this, overall, we're increasing. Put a 1 in chat if you see that. Okay. Number 2 is we're growing recently as well. So overall, recently, yes, check, check. Number 3 is we're positive. We're growing overall, no, because it went from here to negative, but we are growing recently. So this is basically a B-rated stock. Now, I think this is like a B plus because of the price. So Roku is, think about it like this. Think about just the logic of this. That's what I like about this. And I love what Patrick Kenny breaks it down because it's logical. Like, think about it. The company is growing in revenue. It's growing in cash flow, and it's been growing in revenue. Think about it. In business, if you're growing in revenue and growing in profits and growing in cash flow, then your company is growing. But the opportunity is that the stock isn't. So that's where a lot of people don't understand, and they're not learning things the right way because they just look at price. They're just looking at like everybody. It's so funny how many people I know. They're like, bro, I need to buy Tesla. Bro, I need to buy Amazon. Bro, I need to buy Apple. The new iPhone came out. When a lot of these might not even be a good rating right now. I'm not saying they're bad investments at all, but I'm just saying is there's a lot of like, oh, like I'm going to go buy Meta right now. Like, guys, this is at the top. Like, can it go higher? Yes. But it's like the same thing with saying like buying Bitcoin right now. It's not the opportunity. I'm not saying don't buy Bitcoin. There's going to be a time and place where we will be buying Bitcoin. Okay. But right now it's not because it's already all-time highs. But then you have projects like Roku that people aren't talking about that have huge upside. Because during COVID, this hit this area. And with them maybe getting a couple more partnerships, this will start to rise. But right now, they're at a very revenue growing company. So this is another sleeper I would definitely look at. And then the last one I want to talk about is Roblox. Now, put a 7 in the chat. You've heard of Roblox. You know, I have a godson now. Obviously, I have a baby as well, but she's only like 2-3 months, right? But I have a godson, right, nephew, and he plays Roblox, right? A lot of people do. But what's wild is I remember, it's okay. It's a learning experience, okay? I remember, and I have this line, I didn't take it off. I remember when I was looking at Roblox during this time. And I was like, this is crazy. I was like, nah, like this makes sense. Like I've heard of Roblox, like this is the game, like it's getting popular. Like, you know, there's gotta be something behind it. And I looked at the financials and I was like, okay, let's apply. This actually was one of the first ones that I looked at. Because I was thinking about it like this, and maybe we can do this for another call, like how to find like certain ones. Is like I think about like what are people using? That's like the number one thing in stocks. Like what are people using? If you're buying Starbucks, then that means a lot of people are buying Starbucks, right? If you're like buying something, you can also invest in it. So Roblox is something that obviously I don't play that game, right? I'm not like a kid, but I understand that it's something that's being used. And as you can see, overall, we're growing, right? Recently, we're growing. Cash flow. Overall, we're not because it went negative and then plus, but recently we are. So again, this is a B-rated stock, right? Right now, it's not a good investment because it already did its thing. But at this time, this was a very highly B plus rated stock with amazing upside because from October, from a year later, it's up 200%. Okay, so that's because of now the adoption has happened. The same way I see Snapchat, the same way I see Roku, the same way I see a couple of these other ones that I didn't go through. I mean, I wanted to go through Block as well. I'll give you guys this last one, okay? This last one. I hope you guys are getting some game. Like, put a 1 in the chat if you guys are getting some game. I know I'm just going through it, but I wanted to kind of give you guys this, and we'll go through this as well. We might talk. Me and Jean-Luc might have a conversation. You know, we might start pairing this with crypto every week, right? Like, if you guys like that, you know, let me know. Put a 3 in the chat if you guys would like to see that, actually. I want to ask you guys, because these calls are for y'all, not for me or Jean-Luc. What would you guys want to see, like, crypto and stocks paired every week? Like, ideas for crypto, ideas for stocks, sentiment of both, and, like, putting it together on a week-to-week basis. I think that would be pretty cool, actually. It would bring, like, a different type of dynamic. Yeah, because he knows crypto and assets, right? So it could be cool. But anyways, Block is another one that actually, I'm gonna give you guys this as homework. Go look up Block. Okay. If you know, you know. If you don't, I'm not gonna tell you. Go look at what Block does, what companies are involved, what software products actually, I would say, are involved with Block. And you're gonna open your eyes a lot with a lot of different things. But Block, just looking at the numbers, same thing. Growing overall, not really growing like recently as of right now, but from last year to this year, yeah, okay, cool. Cash flow, not growing overall. Eh, not really growing recently, to be honest, if you compare this, but this, yes. So I would say more like a C. Okay, so we can put this more like here. But one thing we can say is that it's more like a C plus, right? Kind of one because of price, right? We're down like 77%. So I think these are better opportunities. Like Roku and Snapchat are the best opportunities, but this is another good opportunity as well when it comes to Block. And if you start to see what products and services they have, you're going to open your eyes. But I'm looking at Block personally for a re-entry, maybe at $64, right? I want to see a small retracement before we continue on the upside. But this is honestly a good play right here for this project as well. So that's kind of me going, guys, when it comes to the stock market. Again, not too crazy when it comes to crypto. I don't want to go too much into it because we already talked about a lot about stocks, but crypto right now had an upside, right? I'll just tell you guys this, just to be frank. If we break above this, things are going to be good, right? This could also bring it down before it goes up. But we'll see. Next week is FOMC. Next week we'll probably have a little bit more emphasis on that and what it affected the markets on this call, because we have FOMC rates next week, which is actually a big deal because they're going to be cutting, but we don't know how much. So this can actually be bearish or it can be bullish depending on how they call it out and how people attain that as well, guys. But there is a lot of opportunity in the market. A lot of different assets we can talk about. I was going to talk about some things, but I'm not going to go into it this week. But remember, right now we want to look at the others. When it comes to crypto, we want to look at others right now. Others has moved, okay? But there's still a lot of opportunity as well in this market. So with saying that, guys, that's basically it for me. Put a 999 in the chat if you guys got some value from today's call. I know we went through a lot, but honestly, this is a good game. Like go apply this. Go be curious. Like that's the thing. Go be curious. Like, wait a second, go look at companies that maybe you buy, right? You're like, oh, let me go look at their numbers real quick, right? You're actually becoming financial literate from just understanding these basic things that a lot of people don't know. But other than that, guys, I'll see you guys next Saturday. We're going to find a rhythm, actually. Me and John will have a conversation to bring stocks and crypto together because we understand that they come hand in hand as well, right? What we think, yeah, sounds good. But yeah, appreciate you guys. Appreciate you guys to have a great day, great weekend. And I'll see you guys next Saturday on another crypto and assets call. Invite somebody, let people know about this call because we definitely want to, spread the awareness on this weekend, guys. You guys have a good one, and I'll see you guys very soon. Peace.